Hey there, Steve Rubis with another installment of Investor Relations in 2 minutes or less. Today we're going to tackle the idea of the earnings pass. And anyone who watched my last video probably asked themselves, what is an earnings pass and how do I obtain one? Well, unfortunately, they're very difficult to get, and they're typically the gift of some sort of crisis or management execution going awry. And in the first quarter, there are a couple of examples that have an earnings pass. One is Johnson & Johnson. The other is Las Vegas Sands. And I would also suggest that the exploration and production industry squandered their earnings pass in the fourth quarter of 2019. So now back to how you obtain an earnings pass. Well, you have to be forthright and honest about the crisis, situation, issue that arises, when it occurs, and explain and telegraph to the investment community that things are changing and why your thesis broke. If you know you have gotten an earnings pass at earnings if your stock is up significantly when you've missed estimates by a significant margin. So let's go through the typical scenario of when you get an earnings pass. It's typically a company that's a serial miss and lower, credibility is shot, no one believes anything the company is saying, and sell side estimates are likely outrageously high. And the buy side knows that each one of these negative components exist. And this is the crux of the issue. If the buy side knows that numbers are too high from the sell side and these negative issues exist, that means you have an opportunity to have an earnings pass. So again, what does it mean for the first quarter of 2020? If you're one of the companies that came out early in the cycle, especially in March when the market was selling off and telegraphed that things were changing, you have an opportunity for an earnings pass. So back to our examples, Johnson & Johnson got an earnings pass because very early in the cycle, they said, look, our guidance is not going to be correct, and telegraphed that change was coming. And then on the earnings call, they gave scenarios for guidance. Las Vegas Sands is another example of an earnings pass because they telegraphed things were changing well ahead of earnings. And one of the most important things they did was maintain financial flexibility going into the quarter, things suspending the dividend. So really, management's opportunity this quarter is to sketch out your new normal, reset expectations, establish the narrative that you want investors to focus on for the next several quarters. And again, the key is if you're a company that has come out early on and said, look, our guidance isn't going to work, or you've removed your guidance, your opportunity is that you have an earnings pass this quarter. Don't squander the opportunity. Thanks for watching.